Welcome to TheoTrade. This is Don Kaufman. January 26, 2022, the day that the Fed fear has come to fruition. All right, so on this FOMC Wednesday, FOMC comes out with a statement that I would say that most people anticipated. Nothing that was, blaring in there. In fact, they probably made the statement in the most dovish fashion they possibly could. Nevertheless, quantitative tightening. That's a phrase we're going to be hearing a lot of in the very near future. And that's not just tapering down the balance sheet, that's actually contracting the Fed balance sheet. That, and of course, interest rates look like they are definitely going to be on the rise here. March, the first interest rate hike, as inflation apparently is running well north of 2%. Yeah, being a little facetious in that particular front. Nevertheless, the Fed comes out and they didn't go totally double dove down this time. They maintained a little bit more of a hawkish stance than I would have anticipated. But, it doesn't matter what the statement says. It doesn't matter what you might think. It matters what the reaction in the market is. And in this evening's video, I'm really going to cover a much more quantitative take on what the marketplace looks like for just the next few trading sessions. And I got to tell you right off the bat, this thing has got wild volatility written all over it. If there is one thing that you want to be able to pull from this evening's video, okay, get ready to rumble inside of this marketplace because it is going to be rocking. I can look at these S&Ps all day long. So what were we doing today? Well, we were rallying right up until the point of the Fed when we had an absolutely hideous reversal. But net, where did we finish the day? Massively unchanged. Here we are in the after hours. What are we doing? Absolutely nothing. When I say we finish unchanged, forget about where the futures presently are. Take a look at the SPX. The SPX actually finished, again, almost completely unchanged in the day. And I have to tell you, following some of the Fed statements, okay, I think this was actually a huge win. Nevertheless, let's read, again, as quantitatively as possible into this marketplace. Push all of the Fed fear aside for just a moment. Okay, first and foremost, and it's very rare on an evening video that I would literally kick off with expected move. So for those of you that are a little maybe newer, okay, and not necessarily looking at expected move on a day-to-day basis, what we do is on a Friday afternoon, okay, we take a look at an option chain for the following Friday, meaning that we look at the week ahead and we look at the option chain, and the option chain will tell you what the expected move happens to be. And the expected move is just like a standard deviation. 68% of the time we should fall inside of this range. The expected move of the week that we are presently in was just about $150. So it's plus or minus 150. You're supposed to go up 150, you're supposed to go down 150. Okay, but we've already passed through Monday, we've passed through Tuesday, we've passed through Wednesday. So what do we have left? Thursday, Friday. Now, my statement was get ready to rumble. There's going to be a lot of volatility. I think the way to display that isn't necessarily to look here, because where are we right now? Where are we on the week? I think the best way to do that is to zoom right in. Well, this central line, okay, this is where the week started. We dropped down, broke through the bottom edge. We got wild yesterday, rallied back up. Today we were much higher, got wild to the downside and finished for the most part unchanged. We are just mildly, okay, south of where we actually started the week by about 50 S&P points. There's about 100 points down to the lower edge of that expected move. Okay, but here's the conversation piece. I'm not telling you right now anything that you could not have discerned yourself. The conversation piece is when you start looking over at the SPX and specifically the trade tab now. Now this trade tab, okay, there are but 2 days left. It's only Thursday and Friday. And hello, there is presently a $111 expected move. Okay, so if you look at this, you're like, wait, so there was a $150 expected move, which is huge coming into the week. That was for the entire week. Now there's only 2 days left, and you're telling me it says 111? That is correct. As I said, get ready to a rumble. This is a huge move that is being implicated, and it's being done on a 38 vol. Like if you saw the VIX, and you got to put this into context, if you saw the VIX at 38, I mean, the VIX is at 32, but if you saw the VIX at 38, you'd be like, duck and cover, get under the desk. Go take a look at the QQQ. Now, we all know that some big earnings are coming out. The QQQ for the next 2 days, it's almost at a 50 vol. That is out of this world. That is, again, duck and cover under the desk kind of talk over there. But rarely will you see 2-day volatility of a major index and or ETF nearing a 50 volatility. Some of the highest volatility ever recorded in products like this was obviously all the way back down, like 2008. But this volatility, it is up there. And I stress to you, you can talk about, the Fed fear comes to fruition till you are blue in the face. All that matters, though, right now, push the Fed aside. They said what they had to say. Now, you would have anticipated the volatility to drop, right? The Fed said what they had to say. But you're not going to see that on the screen right now. You're not seeing it at all. In fact, there are a number of significant risk factors that are coming into play, which, again, I want to bring to fruition on this evening's video. So volatility is one of them. And I also want to clarify that just because the volatility is sky high does not necessarily denote that we are headed lower in this marketplace. Okay, it doesn't necessarily denote, because we still have some substantial earnings, obviously, to contend with. On Thursday, speaking of earnings, of course, none other than Tesla is out after the bell over here. And I think the irony of Tesla, if you look at it after the bell, where is it? It is also massively unchanged. I mean, legitimately, it's down by $7-8 here in the after hours. But the expected move on Tesla was almost $100. So you got away with that one unscathed. But the evening is young and the sellers could come out. You don't know what tomorrow is going to hold inside of here. All right. So why else would I have a little bit of cause for concern? There's a few factors, as I said, like volatility alone inside of the SPX. It doesn't say that we're going to tank. And I want to make that, again, abundantly clear. That doesn't mean we're going to tank. But there's some other risk factors that don't make me exactly warm and fuzzy. Number one would have to be, normally when a Fed meeting comes out, right? When the Fed is done talking, volatility should do what? It should get crushed, because they go, risk is off the table. Except apparently risk is not off the table. Quite the opposite. We have a VIX that is actually sprung back up to 32. Now, wait for it. We were trading 26.90 earlier in the day. I mean, looking at the VIX, this does it justice, because as the Fed came out, volatility dropped. That's what we would have anticipated until it rocketed. And of course, the volatility took off to the upside simply because the marketplace started to tank once again, but we finished relatively unchanged. The volatility finished higher. Now, if you look at the volatility futures in the after hours did come down a little bit, but they soared. Here's one really critical aspect worth noting. The volatility futures, we are in, once again, backwardation. If you're unfamiliar with backwardation, well, you get familiar with backwardation. What ultimately it means is short duration volatility. And I'm actually going to highlight this in the best way possible here, but here are your expirations, and here's your volatility price. If you take a look, like 84 days out, volatility is, 27. You look here, 48 days out, it's the March expiration. We're at about 27.5. If you look just about 21 days out, volatility is up to what? 27.75. So what are we? Okay, volatility appropriately looks more like this. Short-term risk is actually greater than longer-term risk. What that just breaks down to, and let's not get all crazy about it. It breaks down to the market is in the throes of chaos right now. I mean, when volatility futures invert like this, we're in a really chaotic state. The other aspects that I think beg to be mentioned. So volatility futures flipped over just means, I think the easiest way again to say it is on right now. Like, if we're rallying tomorrow morning, can't trust it as far as you can throw it. When you have volatility futures inverted, which is also termed backwardation, trust those S&Ps as far as you can throw them, because anything can flip them over, because volatility futures inverted changes the dynamics, if you will, of how many firms offload risk. The next one that I'm really starting to pay attention to again, okay, this was largely taken out of the equation the last couple of days, but the bond market. You know, if you're looking at the S&Ps and you saw this wicked reversal, right? So the S&Ps have this wicked reversal after the Fed. And I think a lot of people caught that one, but they didn't necessarily catch what was going on inside of the bonds. The bonds tanked. Okay, the bonds are like, this is it. This is real. Okay, finally, like it's come to fruition. It's what I was saying. That real fear has come to fruition. Watch the bonds. Watch the bonds in the next 2 days of trade, because if we start to break under, you know, like 153-ish, it's going to get real out there, and they are going to come for tech in a very, very big way. Okay, save me, Apple. Not even Apple is necessarily going to be able to save you if those bonds start trading. It's just about a 1.5 away. They get to like 153. There is going to be a trigger point to where tech is going to get annihilated, because that, okay, is indicative of rising rates. All right, next aspect. So bonds are in a threatening posture right now. They continue down. They rallied a little bit here, but if they continue down, it is going to get ugly in tech land. And I cannot stress this enough. You look over at the notes. I mean, the notes are hanging on by a thread. You know, the notes get, again, below like 27. They're only a couple ticks away from it. They get it below like 20, 127. It's on out there. So volatility futures kind of say it's on. The bonds say it's close. The VIX is actually what is rising. What else do I have? And what else do I have? Look at the dollar. A lot of people miss this one as well. The dollar is ready to smash, break out to the upside. Okay, break out in the dollar. To me, this is like a new VIX. This is called duck and cover, people. So if you're going to buy the dollar, right, you're buying the dollar, volatility is earning backwardation. Again, the SPX is actually showing a $111 move. As I said, like, get ready to rumble. It is real out there. There's no question. Okay, order flow is going to be deep. I mean, really deep in the next 2 days. And what I mean by deep, I'm talking like contract size flowing through the S&Ps. Okay, options contract size. It is going to be some wicked, wicked order flow in the broader marketplace. So sit back and kind of enjoy the ride. I'm going to tell you right now, this right down here, okay, 42.11. Mark it on your screens, because we are highly likely to retest it. And I also want to reiterate, okay, I don't have any levels below that 42.11. It becomes a little bit of a free-for-all below it. If we are to crack the 42.11, again, Thursday, Friday, you have to assume that we are going to be in some really hideous risk in the near term. This volatility, people, it is not going away. It's not going to go quietly off into the night. Prepare for it. Sell premium when you can. Cover it when you can. Reduce risk. Use spreads. Again, these are all tactics each and every one of you need to be familiar with to trade in the extreme. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.